Welcome back to the Trendchecker. Hope you are doing absolutely fine. Without wasting your time, let's get started with the new video. In the last video, we have understand the basic understanding of Trendchecker A indicator. In this video, we will go basic to advanced level with the Trendchecker A, how you can utilize the setting of Trendchecker A and make it better for your trading, right? As you can see, you can get your Trendchecker indicator from the Trendchecker IO website. Our website link is given in the description. Before we start, give like to the video, subscribe to the channel. If you have any questions, you can comment down or you can ask me in the directly Telegram channel. It's free to join. Telegram channel is free to join. So yesterday we have known how the market cycle works, right? Now let's go to the Trendchecker A and see their settings, right? Before we start with the setting, people who are new and do not have basic understanding of Trendchecker A, let's go one by one with the different parts of the Trendchecker A. This is the 50 EMA zone. This is the 200 EMA. This red and green are support and resistance. This white line is Trendchecker 2 line. These yellow dots are parabolic support and resistance, mostly known as PSAR. Along with it, we know there are diamonds given above the candles on the top are known as market maker indication, MMI diamonds that we call it. Before we start, go watch the previous video so you can understand this video better. Now, whenever you add the Trendchecker A to your TradingView platform, you can see there are multiple settings are given. Basically, all default settings are ready to use. You do not need to change any settings, but if you want, you can change it. You better know how the indicator works. More easily you can do the analysis, right? First of all, in the input you see an entry signal. Entry signal is the signal which is that gives you buy and sell signals, right? There are two types of signal given in the Trendchecker A. One is Trendchecker and second is Trendchecker 2. Now if you have selected Trendchecker signals, you will see whenever price cross a 50 EMA zone, you will get a buy signal. Similarly, whenever price cross a 50 EMA zone, you will get a sell signal, right? So price needs to break 50 EMA zone in order to give you buy or sell signal. Now if you use Trendchecker 2 line as your entry signal, that means whenever price breaks Trendchecker 2 line, it will give you buy or sell signals. For example, here it gave you a sell signal when the white line is broken. Similarly, the sell signal is appeared when the white line is broken. Same, if you see, a buy signal appears when price breaks the Trendchecker 2 line, right? You can use any signal that you prefer. Both signal gives different data in different time frame, so results also differ. So whatever the trading style you are doing, if you are doing scalp or you are doing a swing trading on a longer time frame or you are doing binary trading, you can decide by back testing which signal is preferred to use, right? Next is parabolic SAR, that is given as the yellow diamonds here. This is called parabolic support and resistance. The settings we have used are not the default one. Default one is 0.02, 0.02, for increment as well 0.02, and for max value is 0.2. When you use the default, you will see it will give you the support and resistance that is only valid for that particular time duration. If you see, you will get a multiple support and resistance area that is valid only for that particular trend, not for the future trends, right? You cannot predict the above resistance and the below support with the normal PSAR setting. If you use 0.01, the settings that we prefer to use with Trendchecker will give you the support and resistance parabolically above and below that is valid for a longer period of time. If you see, you will see a drastic change in the support and resistance given by the parabolic SAR. Right? Parabolic SAR can be used as a trend line as well. If you see, it already creates a trend line, and when a trend line is broken, it gives you a good downside move, right? So it can be used as a trend line, or also can be used as parabolic support and resistance. This is the basic understanding of PSAR. It is more than that, but you don't need to go deep in technically just to trade, right? Now, after the PSAR, there are normal support and resistance that is given by red and green dots. This one, the red one is resistance, the green is support. The current support and resistance are derived by last 15 candles, right? It will give you last 15 candles support and resistance. So if you want a 7-day length, it will give you different support and resistance based on the 7-day candles, right? Past 7 candles. It will take in account past 7 candles on that particular time frame to give you the support and resistance. How you can use the support and resistance is this. You can use the default value as 15. When you see it is given a resistance or support, you can scroll back and back test in past what happened in the chart at that particular level. For example, if you see for this resistance line, we are checking in the past. If you see in this area, we already had a resistance before, right? So this becomes a major resistance zone in the market, right? Whenever price comes to that resistance line or a resistance zone, it will behave or react differently. Similarly, when you see a support and you look past, you will see if there is a big support, that means that zone gonna react differently whenever price reach to that particular level, right? So it gives you a basic support and resistance area to trade with, right? Now, after the support and resistance, there is an elder impulse system. Now, for the elder impulse system, let me teach you what exactly is the elder impulse system, right? So, you know, with the different oscillator indicators, the most famous one is the MACD. right? Moving average, convergence, divergence. This is the normal MACD, the famous one that everyone mostly use on the trading view. If you see on the MACD, you see whenever a green histogram appears, price tends to move up. That means it is showing the strength for the upward move. Whenever color on the histogram on MACD change from green to whitish color, you will see the price is going sideways on the chart, right? So on Trendchecker, in order to understand and implement the MACD without giving you the MACD, we have implemented the elder impulse system. If you see, there are three colors in the Trendchecker chart. Basically, if you remove the Trendchecker A, you will see two colors. There is a green one, there is a red one, and that's it, right? If you add Trendchecker A, you will see there are three colors in the chart. First is the green one, second is the red one, third one is the blue color that you see time to time. This blue color candles, the blue color shows you the elder impulse system, right? What basically that means is, if you check the MACD, whenever the blue color appeared, you will see the histogram color has changed. If you see from here, for this area, if you see, whenever a histogram change color, you will see the blue color on the candle appeared. What that suggests is, whenever a move is happened already, the price went from above, the upward move is already happened. Now it is time for a price to rest or go sideways, right? Or to go retrace a bit before it's going down, before it's the next move. So before it change color to red from green, the area that is in the blue color, that is the resting area, that means price is resting or is going sideways, is called elder impulse system. So visually, with the blue color candle, you can say, if you are already in a trade with this buy signal, if you are in long position, whenever you see a blue color candle, that means it is time to take profit or close the trade, right? Similarly, if you are in a short position, you will see a blue color candle whenever a histogram change red to reddish, red whitish, right? If you see here on this area, you can see the blue color appeared, right? That means if you are in a short position with this sell signal, it is a good time to take profit, right? Now, after the elder impulse system, it shows you the EMA length. So baseline is basically a 50 EMA zone line. If you remove the baseline, it will only show you the 50 EMA line. If you click on the show baseline, it will give you the 50 EMA zone along with the 50 EMA line, right? So SSL1 is not recommended. You can uncheck if you want. If you want to use, you can use it. The show ATR bands, it is irrelevant, but if you want to use the ATR bands, you can use. ATR is basically average true range, but if you are trading crypto or any asset that has the more volatility, ATR bands will not be the way to trade. So all other settings here are default and not to mess with. The Trendchecker 1 baseline type that we call a 50 EMA zone, you can change to any EMA or EDSMA you want to use. If you want to use a different strategy with the Trendchecker indicator, you can implement that strategy by changing it from here. We are using 50 EMA zone, that is why the baseline length is 50. The white line that we use is called Trendchecker 2, a continuous line is simple moving average with the length of 5. If you want to use different moving average, let's say if you want to use 10 simple moving average, change it to 10, and the white line will give you the signals based on 10 SMA line. Right? Different settings will give you different results on different time frames with different assets. Right? If you are trading any asset, backtest with Trendchecker A what results you are getting on which time frame in order to use it for your trading style. You can use it for scalping, for day trading, for swing trading, and for binary as well. Right? After that, we are mostly using the 5 SMA line because for binary and for scalp trading it is always useful. Now the exit type is HMA. Let's understand what is the exit type. Right? If you see Trendchecker A chart carefully, you will see there are indications given by a red and blue arrows. Right? Those arrows are the indication, you can say an early indications of the move change. You can use it in two ways. First way is if you are not in a trade, that means whenever a blue arrow appears, that means if a blue arrow appears and price close above the white line, the Trendchecker 2 line, that means it is a continuous uptrend. So you can go in a long position. Right? Similarly, whenever a red arrow appears and a price break the 50 EMA or Trendchecker 2 line, that means it's a continuous move to the downside, so you can go in a short position. Right? But if you are in a trade, this indication signals can be used as a take profit signal as well. For example, let's say you are long with this buy signal, and whenever a red signal appears, you can take profit, because if you see after this range a sell signal came and price went down. Right? So you already have booked your profit early before that move happens. Similarly, whenever a red arrow appears, you can, for example, if you are in a short position from this sell signal, here at the blue indication, blue arrow, you can take profit. Right? There are layers in the Trendchecker, layers under layers, layers under layers. For example, if you are using a daily time frame, then you can use entry signal from daily time frame and exit signal from 12-hour time frame. For example, if you see on daily time frame, you entered here, right, on this particular candle, but you exit from the 12-hour exit signal, that will be this particular blue arrow line. Right? So you will save yourself from these candles, so you will save the profits. Correct? Now from on the settings, the other settings are for majorly the bot settings. For the Trendchecker A bot, what Trendchecker A bot does, that if once you set a bot, for example, if I have set the bot on Bitcoin USD Coinbase chart on daily time frame. Whenever I am getting a buy signal on trend checker, what is bot gonna do? It will buy, it will long the particular amount that I have entered here. You can set your leverage. If you want to use 10x leverage, you can enter 10. The entry size in the percentage, not in the balance. That means 100 means your 100%, your 100% of your capital. If your capital is $1,000, it will use the $1,000. If you want to use only 50% of your capital, you can enter 50. That will use your $500 only, right? And the pair name that is given on the exchange, and then you set the Electron API name here, and then save it and create an alert that will execute trade on your behalf automatically on your exchange, right? The bot is the vast topic. Algorithm trading is profitable also and not profitable also. Majorly it's profitable if you use it wisely, otherwise it will eat your profits, because we know market never goes up or down in a straight line. So there are many opportunities in the market, but if you are wise, you can make money out of it using the bot. Otherwise, manual trading is the best trading method that we suggest. Now you can use stop loss. You can give the order from what trade you should be taken. If you enter long, bot will take only long trades. If you enter short, bot will take only short trades. If you enter both, bot will take long and short both trades. You can enter stop loss percentage here, take profit percentage here, trailing stop loss here as well, right? This back testing time frame is only for you to analyze the past results given here, right? These results will come differently with the different time frame and different assets. As we understand Trendchecker A settings, if you have any questions, you can write me down in comment, or you can join our free Telegram group and ask me. Now, before we go to the advanced knowledge of how to use Trendchecker A properly, what you need to understand is how the market behaves. We know market behaves in cycles, but why in cycles, right? You should ask yourself why market behaves in a certain way at a particular point or at a particular zone. We know the chart is making M patterns and W patterns at the specific EMA zones. It can be 800 EMA also, it can be the 200 EMA also, or at the 50 EMA also. Now let's go to the drawing pad and understand how this is helpful for us. Now see, understand this. The basic concept of trading is buy low and sell high, right? If you are buying at the lowest price and selling at the highest price, the gap between the two, the high and low, will be your profit. Understand that? Now in this market, there are not only a spot trading, but a majorly a leverage trading, or you can say margin trading are happening, right? Different exchanges provide different margins. Some crypto exchange provide up to 150x, or some forex exchange provide up to 1000x, right? What that means is you are using the leverage. Leverage is the money given by the market makers. Now, in order to understand the market maker method, understand this. What is the exchange, right? What is the broker? What is the exchange? How they are making money, right? The broker or exchange is making money from the commission whenever you are putting a trade, right? If you are putting a trade in a long position or a short position, right, there will be always a fee that is going to the exchange pocket. Regardlessly, if you are making a loss or profit, if you are making profit, exchange is not giving you the money from their pocket. Similarly, if you are making a loss, exchange is not making money from your loss. So who is making money and who is paying you? That is the market maker. If you are using the higher leverage, that leveraged borrowed money is given to you, is given you by the market makers. Now who are the market makers? There are different names. Some people say market makers, some people say it operators, right? They are entities, or you can say institutions, with the unlimited amount of money. Now for your basic understanding, let's say if you are buying, let's say for example Bitcoin, if you are buying a Bitcoin at the lowest price and selling it at the highest price, right? Let's say in this example you are buying here and you are selling here, right? So this gap is your profit. Now in order to sell here, first you need to buy the asset at the lowest price, right? So what you will do is you go to the exchange and let's say this price is 10k and this is the 20k, right? So the gap is 10k and 10k is your profit. Let's say if you bought one Bitcoin at the 10k, right, and you sell it at the $20,000, your profit will be $10,000, right? Now when you go to an exchange and ask for a request to purchase a Bitcoin, who will sell you that Bitcoin? The seller will be market maker, right? Seller will give you the market maker at the price of the market, right? And whenever you sell your Bitcoin, there will be a buyer for it, and that buyer will be market maker, right? So in this particular example, you made money with this trade, but understand it from the market maker perspective. What they did is the opposite of what you did. You buy low and sell high. What they did is sell low and buy high. So that $10,000 of your profit coming from the market maker pocket, so it practically market maker did a loss here, right? Now why on the right mind anyone make a loss knowing that they are going to make a loss? Because market movement are derived by, or you can say market makers runs the market, the entire market, right? If you are longing here, that means market makers allowing you to long. That means market maker is already opening opposite trade. What trade you have opened, they are in the opposite side, right? If you are long, market makers will be short. So in order to buy any asset or sell any asset, there are market maker entities already there to buy or sell, right? Now market makers have unlimited money. They can open a position for a longer period of time and can hold that position in negative for a longer period of time. So for your example, you purchase here and sold here. For that entire period, market maker was in a negative balance for his trade, right? You closed here, but market makers are still in negative trade. What market makers will do, it will change the price movement in benefit for their trade. So they will change the movement of the market so they can make profit out of their trade. For your example, you make 10k profits, and whenever price comes to that range, and go below, the market maker will be in profit, and then they will close the position, right? So now you understand how market maker works. In simple terms, if you are going long, they are going short. If you are going short, they are going long. So whenever M pattern happens, that means market is changing, right? There is continuously M's and W's you can see in the market. That means market makers are changing the move for their benefit. Now how to understand what market makers are doing is the different thing, because we cannot say what's market makers gonna do, because there are so many trading sessions and different regions market maker work together in a different way. For example, for a New York time, the New York trading session, all the US market makers trade in a one particular direction, and once the New York trading session is over and London sessions open, all the market makers in the London area will work together with the different directions. That is why we see a different Michael cycles happens every time. That is why price do not go straight up or straight down, because there are multiple market sessions are coming. There is Asian session, London session, New York session. All the market makers work together for that particular regions, but in a different directions, because their positions are different, right? So whenever its price is going up, understand this in a market maker's perspective. If a price is going up in this area, if a price is rising, what that means? That means, that does not mean that buyers are in control or bulls are in control. That is mean market makers are selling. If market makers are not selling, then how you can buy, how other people, retail people can buy the asset, right? In order to buy any asset, market makers needs to sell, because they only have the huge quantity for that asset. Now market makers are selling into the market, so retail people are buying, so price is increasing. Now whenever market maker is selling that asset for retail people to buy, at the same time they are opening their short positions, right? So they are opening their short positions as the price is rising, and at the top, when they think that enough people are trapped already in a long position, they will change the move, right? They will change the market, create a lower low, it will create a lower low and shift the direction, right? Whenever they are shifting the direction, what you see is price is dropping. On the chart it's showing you that price is dropping, but at the same time what markets maker did, that they were averaging entry whenever price was rising, right? So they're majorly averaging their short entries when the price was going up, and whenever the price is going down, they are averaging down and taking the profits at the different level. At the same time they are longing again, because whenever price is dropping, retail people sells. So if retail people are selling, then market makers are buying it back, and market makers are buying it back, and same time they are opening the long positions. When they think enough people are trapped in the short trades, they will change the movement, they will change the direction, and change the move. The price will rise again. What will happen when the price is rising again? They are booking their profits at the same time, averaging down, DCA down their profits. At the same time they are creating another short positions, because when price is rising, retail people are buying. If retail people are buying, who is selling? Correct, market makers are selling. So along with their selling of their asset, they are opening a short position, and they think when enough people are trapped in a short position, you will see a breakdown of the market, right? This is the continuous cycle happens on the all assets. It can be dollar, it can be euro, it can be Japanese, it can be Chinese yen, it can be oil or gold. Any asset you open on the market, you will see the same scenarios everywhere, because market makers are everywhere. They are moving their money from one asset to another. For example, if you see a gold and US dollar chart, for example, if you see, let's compare the gold US dollar chart with the DXY. DXY is the dollar index. You will see if you can see, they are running in a similar direction, right? If whenever price of gold goes up, DXY also goes up, right? If you see, I'm sorry, I opened the DXI. It should be a DXY in comparison with XAU USD. Now see that whenever the price of gold is rising, you will see the price of dollar is falling, right? So what happening is market maker is moving their money from one asset to another, as gold is considered as a safe haven. So there is any uncertainty in the market, market makers will move their cash or liquid money to the gold, right? So whenever they move the money from US dollar to gold, gold price will rise and US dollar price will fall. You can see clearly here, one price is rising and one price is going down. Similarly, one price is going down, one price is rising. These are interconnected markets. It happens with forex as well, crypto as well, and US government bonds as well. They move money from one market to another, right? This is very vast and big topic. The more you enter, the more you understand, you slowly gain the knowledge of the market. Because trading is the hardest and the easiest way to make money. Hardest, why? Because people have no idea what's happening in the market. No one can tell you that price will rise or fall today when the market opens, right? It will be gap up or gap down or a flat market. No one can predict that. Market runs on human emotions, right? Emotions are the most important thing. There are psychological levels in the market for the particular chart. If you understand all these market maker behaviors and you add them with the trend checker chart, trend checker indicators, you will slowly understand the market cycles and market movements and understand the market maker behaviors. Once you start using Trendchecker A, after you understand the Trendchecker indicators, you will see yourself trading differently and with confidence. Right? Now, those different cycles are different for different time frames. Now, I have questions on the Telegram that show the different cycles on the different time frames. So let's go with the different time frames. For example, we are currently on the daily time frame. On the daily time frame, what we see is a W pattern, level 1, and small M pattern, drop, rise, level 2, a small M pattern, markdown phase, W pattern, another level 1, another M pattern, drop, another W pattern, and it is testing the Trendchecker 2 line. So this is the market structure of the daily time frame, right? Now from here it can go up or can go down. It depends on the volume strength of the market and the market situation on different regions, right? You can predict from the candle what might happen. For that you need to understand the Trendchecker B that we will see on the next video. For now we see on a different time frames. Now we understand what's happening on the daily time frame. Now when you go on the 12-hour time frame, what we see is a W formation is already formed, and it is currently making a higher high, higher low formation, right? If you see where the W pattern formed, it is near under the 200 EMA line. This red line, this green and red line is the 200 EMA line. If you see where the M pattern created, it created above the 50 EMA zone. Now you are seeing the picture, what's happening. Now if you go to 9-hour chart, you will see another different M's and W's, right? There are multiple M's and W's in the market. Market makers are constantly manipulating the market for their movement. This is the W pattern on the 12-hour chart. We see it as a big W like this, right? So more you go down with the analysis with the different time frame, you will understand what is the current trend is running and what is the structure market is forming. The basic strategy of Trendchecker indicator we will understand in the next video when we have the knowledge of the Trendchecker B. Right? This was all for the Trendchecker A. If you have any questions, write down below. Don't forget to like, share and comment and subscribe to the video. I will see you in the next video. Thank you so much. Have a nice day.